Hey guys, my name is Ryan. I like to trade leveraged ETFs and make a video on the technical analysis that I'm seeing in the after hours. Let's start it off with GDX, Goldminers, long-term chart. This goes back to 2011. We can see this big overhead resistance level that we've got going on here. And we touched here back in mid-2016, and it has proven to hold firm. Let's get right to it. Let's zoom into the 2-hour chart. So here on the 2-hour chart, what do we see? We see this upper bold black line as the 6-year resistance. We see a large impulse wave up, followed by a wedge pattern on the way down. The wedge pattern, here we have a 1, 2, 3, 4, 5, 6, 7, 8, 9, and we break out. And now we've just been consolidating for the better part of the year here in what I believe to be a symmetrical triangle. This would be a bullish symmetrical triangle if we take the whole chart into consideration, because we have a strong bullish move up. We fall back down and set our A, B, C, D, E. We're about in the middle part of C and D, and I do expect it to move up to D. June 15th is the rebalancing of Nugget and JNUG, so that's just an important date to keep on your radar. These green and red lines are going to be my ultimate, bias towards either the long or short side. This line I drew in here just kind of marks the volume trend that I expect to occur. If what I'm seeing does play out and we do move to D, I expect us to pick up in volume here in the 2-hour, and then as we fall, I expect us to come back down, and then a telltale sign will be as soon as we start to curl back up. One interesting thing to note, I don't know how much weight you'd like to put into it, but I noticed that on our first impulse wave here, we have 3 notable patterns, and they are very similar and in the same order that we're having them over here on the right side. We have a wedge symmetrical triangle pattern going on here, continuation. We have kind of a measured move type of pattern here. We have the same measured move over here. It's marked by 2 peaks. This is marked by 2 peaks. And then finally we have a descending triangle over here. So this might not be relevant, but I just kind of looked at it for a long time, and I actually ended up, I ghosted the candlesticks from the symmetrical triangle, and I think it might support the price action that we saw today. I know that a ton of people are very confused at what's going on, and I think that people were like, oh, we're breaking out. Other people were like, no, we're breaking down. And what I think happened is we saw a double bust descending triangle today, which is fairly rare, but sometimes patterns do bust in the opposite direction that they're supposed to, and that usually leads to the opposite scenario playing out. And then that probably happens like 30% of the time, and then 15% of the time we'll have a double bust where it'll do something like this descending triangle did, where we broke out this way, we busted, we fell back into the pattern, we broke out this way, we busted, we fell below the pattern, and then we shot up. And if we take a closer look at this, we've got our strong impulse leg into this. We set our resistance level, we set our A, this is our support line, we come up B, C, D, E. Over here we come up A, B, C, D, E, and then we break out briefly. And what I really wanted to show with this chart is that I was very confused why we fell back into the pattern today. Now this would be pretty bearish scenario if it were not for the fact that we recovered and broke back out of the descending triangle within probably an hour's timeline. And we see the same thing happen over here on the right side. We break out for half a second, and then we fall back into the pattern, and then immediately we see an enormous leg up the next day. So if this would my theory as to what's going on with the price action, and that this is just kind of the ebb and flow, this is a consolidation continuation pattern, and we're going to head to D as our ultimate destination, this might give some weight as to why we fell back into the pattern after E today. I'm not terrified by this. It just was unexpected. We broke out. I was expecting us to retouch. I have this green arrow. I expected us to come down and then bust up higher, but instead we fell back into it, and we see the same thing occurring over here, and that's really all I wanted to show with this. For some divergences, over here we have our bull buy setup, and we have this stochastic high and then a higher high, and over here in price we have a high and then a lower high. As for the descending triangle in itself, I saw a interesting divergence in that the stochastic makes equal highs on each of these highs, yet the price has been trending downwards, and I think that this might be a divergence. It's not a typical divergence, but it is of note nevertheless. So in our 15-minute time frame, we see us coming down, reaching the apex of our descending triangle over here. And at the apex, we break out higher and we break above this resistance level right here. This sets in our pole. We draw this from the breakout point to the top of our resistance, our first resistance line. And this impulse wave here is 1, 2, 3, 4, 5. And then we come down and we set in our A, B, C, D, E. Slight divergence here on C. It's not exactly significant since it is on a shorter time frame, and more importantly, it's a small divergence. I like divergences that last for a day or two. This one is an intraday divergence, which may have led to us breaking out here at D. But then again, we did fall back down. We've got the top of B here as our first resistance line that we need to break through, and breaking through this will set in an impulse wave of 1, 2, 3, 4, 5, reaching our ultimate destination D. What we do here with this initial pole here is we drag it over to the apex point. Now I'm not sure when price is going to break out, so I drew it over here, but it is the same. It is drawn from the support line of this descending triangle. I just cloned it, so it's the exact same length as this original one, and that comes up here pretty close to the end of what we're expecting to see. So on the 5-minute time frame, it looks like we had this false breakout right here. One interesting thing that I saw is I'm very interested in the apexes of the lines and patterns that I draw, and what I was expecting is for us to come down and touch this and break out. Turns out that the pattern was longer than I expected, and so this is our top resistance line right here. We see that we come all the way down, and this is basically our apex point, marked by this, the larger picture previous resistance line here. So when these two lines converge right here, we see that this is actually our ultimate bottom, and I found this interesting, and it registers the ultimate bottom along with our RSI, our CCI, and our stochastic here. And then we see a significant move higher, and I was getting really nervous. We were going to break down here, but we quickly, we touched our support line one more time and bounced off and broke out of this descending triangle again. So here on the 1 minute, we're getting into this is the full picture of the day. And we see that we had this huge spike today. I was getting very excited, and then we filled the gap. Everybody was like, what's going on here? And then we began to tank, and a lot of people were, selling their shares and whatnot. And then, this apex point came, and we recovered. We broke out here, we retested this line, and we came up higher, and we ended the day in this pattern. Now, what does this pattern look like to me? It looks like an ascending triangle. We have this long impulse wave here. We hit our top. This is our first resistance, A, B, C, D, E. And what are ascending triangles good for usually? They're good for bullish continuation moves. And what supports this? Well, at the end of the day, we can see the largest amount of shares purchased at the end of the day here with this big green candle. I think that is very significant. Another supporting fact is that our RSI stayed above 50 throughout this entire move. And what else is interesting is, as far as our CCI goes, which is used to measure momentum and who's in control, we can see that our CCI is now starting to turn towards the bull bias. We were in the bear bias, and we kind of, we broke out. We had this huge move. This was overbought in terms of the CCI. Usually the top of the range is about 250, 275. But anything above that, you should usually sell. Anything below this point right here, you should usually sell. And then, we continue to break down in price, and right here, the bulls start to turn the hand. Bears try to fight one last time, and they barely get it past 100 here, and then the bears just take over, and we run it all the way up to 250. Now, running it up to 250 when your trailing volume here is 100 is a indication that, a trend might change. And we definitely see that in the price action, and people take profits right here. The bears try and take over again. They only get it to 100, and we almost touch 250 again. We come back down, and we're starting to consolidate here. So if you watched my video yesterday, I'm going to go ahead and continue with my original thesis that we're going to make this run up to this D wave. And that's my analysis for gold tomorrow. Let's move on to the financial sector. I've been finding it fairly interesting lately. I used to trade it a few months ago, and I've taken a step back just because I've seen that price has been moving sideways in a very tight channel. and I couldn't really identify any serious patterns that I would be interested in. I started to think for a long time that this is a head and shoulders, and it very well might be. I don't want to make the assumption that it's not. But from this, we can see that I have an Elliott wave here. I've got our 1, 2, 3, 4, 5. This is our high point, $50. And an interesting thing to note over here is if you leave out this 2, 3, 4, and you just look at this point right here, in comparison to this picture right here, they're fairly similar in a lot of ways. And I'm a big guy at, looking at fractals. And I think that, my favorite quote about the markets is that the market never repeats itself, but it rhymes. And so I'm always looking for these kind of similar patterns to show up, whether it's on the hour chart or the daily chart. I just showed one in GDX. But so I guess, from this, what we can see is that we have this impulse here, and we kind of dip down for a second. We flag out right here. We set our high. I bet a lot of people are thinking that this is the head right here. We come down and make 3 rounded bottoms here that are all fairly equal in their support lines. And over here on the current picture, we see a very similar thing. We have our impulse wave. I would say that this would be our dip right here. I would say that this would be our head. And then we have 3 rounded bottoms, all of similar length, or all of similar bottoms. Here on the hour chart, I have this mini divergence that we have right here. I see the stochastic moving up, 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 while price moves down, down, down. And then we actually, set our low right here. And this low comes in with a CCI of 375, which is extreme. And then the bulls kind of take back this level. Right here, we see 2 green CCI bars. I'll go ahead and pull this back down because I like to see my RSI in the chart. All right, so that's on the hour time frame. What do I have for the 30-minute? So I don't have any indication that this is not a head and shoulders. It certainly could be, like I said earlier. There's just some reason to believe that it's not, and I'd like to try and present both sides. Again, the head and shoulders argument is fairly clear. This is the left shoulder, this is the head, and this is the right shoulder. The possible continuation theory would state that, there are 3 parts to this left shoulder. We've got this right here, marking our low. We come up, set what might be a head and shoulders right here. This is another low, and we have a big run up. We drop. You see, it's just similar patterns right here. So that there are 3 parts to this right here that I'm seeing as well. And we come up, we set this. We have our possible head right here. We drop down, and then what's very similar to me is this big impulse wave, this big drop. That's not a lower low dip, and then we run up. So from this, let's go into the 15-minute chart. Actually, let's go back to the 30-minute chart. I have some divergences here that are of interest, I guess. So here we have our CCI moving lower, which would be our first divergence, which would set us off that this is an unsustainable uptrend, and it comes true as we have this big fall downwards. However, once the CCI gets way down here, we have a run up, and we see that our CCI down here is not the same level as it is up here. However, price is making a flat pattern right here. And lastly, I guess I see this mini divergence right here from this point to this point, and our stochastic is moving downwards, similar to like it did over here on this side, and that gives me reason to believe that price is going to fall. However, if we maintain our thesis from the other side, that this is a reciprocal of itself, what happened on the other side? Well, on the other side, we had this big impulse wave up, we dropped back down, we ran up again, made pretty similar highs, and then we fell back down again. So you could make the case that falling would reciprocal of itself, and therefore we might move higher because this is the next price action that we had after we set this lower low. All right, so I guess here on the daily, I zoomed out to the daily right here because I think that this triple bottom here is very interesting, as well as some daily divergences, which are multitudes times more powerful than anything on the hour time frame. First one we've got a low followed by a higher low, while price makes a low followed by a lower low. First divergence. Second divergence is that this makes a higher wave and this makes a lower wave. So this one right here is a current divergence. For example, this divergence down here would be put on the back burner to this one just because it is closer in time to us. However, what I'm really interested in is the possibility of this being a triple bottom pattern. So the notes I have for a triple bottom are volume trends downwards 67% of the time, what do we see in volume here? We see that volume is heading on lower, downward price leading into the pattern. We see that we have downward price leading into the pattern, but it should not drop below the prior bottom. I would say that this is the prior bottom. Breakout target is where the breakdown began. This would be where the breakdown began, and I marked this out by these orange lines right here. Look for a tall left side with few to no price consolidations. I wouldn't say that there's no price consolidations. You could say that this is a consolidation, but we do have few to no consolidations on our way down to our triple bottom potential pattern. Better performance if triple bottom occurs during a large flat base. This is a large flat base. If I have ever seen one, we've been stuck in this pattern since the beginning of 2017. Triple bottoms can appear as the corrective phase from a measured move up. And if this is the case, the breakout may be less than expected, which would make sense if this is a triple bottom coming out of a previous high. We're going to find a lot of resistance at that previous high. So what it means by a measured move up is this is a flag or a measured move. It's basically flat right here. Price just stalls and let the technicals cool off, and then we move up higher. So I guess that, it is the corrective phase from a measured move up. If less than 3 months decline into the pattern, it works best. Right here, it looks like we have a 1.5 month long decline into the pattern, so we would check this off our list. If the triple bottom appears after a peak, the breakout move is likely to stall at the peak, which would go along with our previous understanding, and better performance if the last valley bottom is above the second valley bottom. Right now, I would say that these are equal valley bottoms right here, and so that one would not hold true. However, every single other pattern description is legitimate. Another thing of interest is to note that our RSI has stayed above 50 on the daily time frame fairly well. We do have these bullish divergences, and I've marked some fib lines right here that mark as resistance for us to get to. We have our initial drawing. I drew the fib from this low. Here, let's just go ahead and do it. So I drew it from this low up to, what did I say? This is our 100, and it looks like I might be just off a little bit here, but the 127 falls right there, the 141 right there, and the 161 all the way up there. Let's get rid of that just so you can see what these lines are marking. I had this green line right here as a potential breakout price. And let's move into the 5 minute. On the 5 minute, we have a ascending wedge, and this is very interesting. I had us coming down to the 50% retracement level, which I very well might take a position in if this drops to 43.50 levels. But as far as the ascending wedge goes, you can see it's pretty clear, and it's even, we have a little head and shoulders right here. We barely get below it. We come up higher. This high point, or this reversal point, would probably be where these two lines touch, which would be our apex. We would draw this down, marking our low. Then we come up even higher, which is actually, according to theory, that we come and touch the apex before falling back down, and that's our final exit point. And we do see that we are starting to waterfall quite a bit here. So my psychology when I'm watching this price action tomorrow is that at the 78.6, I'll be interested. Once it breaks down, I'll take half position at $44, and around the 43.70, 43.50 range, I'll take a full position. And if we fall all the way down to 43, I'll double down. And if we move much lower than that, then I'll take my loss. But as far as all of our other analysis goes, I think that we've built up a firm case for a semi-firm case for a potential 10% move up higher, as opposed to a potential 2 to 3% loss, and therefore 3-to-1 risk reward ratio would say that it's worth the risk. So let's go into the 1 minute, and I don't have anything for that. All right, so this has been my analysis of the financial sector, 3 times bull shares, FAS. Let's move on to XBI. XBI, I've got a lot of divergences going on here towards what I believe to be the top of a rising wedge. Let's get into the shorter time frames. I do a more detailed analysis here on yesterday's video, but I see 2 ascending wedges here in this pattern on this long wave up. This is our uptrend channel, so the overall price movement is bullish. But right here, we come into the channel, we set our A, B, C, D, E. Like I said in the financial stocks analysis, We should touch our apex even though we break down. This is actually a good sign right here, and we do break down. And we come into what I believe to be another ascending wedge pattern right here. Let's go ahead and just bring this down slightly. So we come in, we set our A, B, C, D, and I'm expecting us to run up to E, where the apex lies, and then fall way back down. As far as a divergence goes, we have one here on the 2-hour chart from this high to this higher high, and right here price is flat for the 1 hour. So moving into the shorter time frame, we're here in the 15-minute chart. I can see right away that we might not make it all the way up to our apex point here in the ascending triangle. And the reason for this is fairly simple. One interesting thing is I saw a diamond bottom down here, which is fairly rare. When you do see them, I just want to point them out. It's marked by a high point in a bottom, followed by a low point, as well as numerous touches in the price action from side to side, filling in the white space. In the 15-minute here, we have a divergence. We have a low and then a lower low, as price makes a low and a higher low. This cannot happen. We see that we have a wedge that formed right here, and price just gets squeezed here in this tight little area, and then it finally makes its last breath of air and goes lower, gets too tight for it in there, and we drop down to this support line right here, and we try to run back up, and we hit a double top right here and get slapped back down. This would make sense that we run up here, because if we go along with what the overall price move right here, what we expect it to do, which is to move up to the apex point, we see this exact same thing in another ascending wedge occur. We have price break down out of the ascending wedge and then try to move back up towards the apex point, and we notice that the high point is where the apex of the ascending triangle actually lies, which is interesting. I find it interesting always when theory actually is true, and you see that on your charting. And we break down lower. So I marked this in red right here as a double top area with this bolded line. It looks like we completed this impulse wave up. I bought some LABD, which is the bearish biotech ETF, 3 times leveraged fund, and we'll see how that plays out in the remaining days. Let's go on to the 5-minute. And lastly, we can see an interesting divergence that would have tipped us off to a potential corrective move downwards here, and that is that our stochastic makes its high point right here and continuously moves lower all the way into our trend as price moves higher. The stochastic doesn't significantly have to move lower or precisely, just like a general outline, and you can see here that this is relatively flat, but the move is, ultimately downwards, but the comparative move in price is significantly higher, and that would tip us off that even though this is, a weak downward move, price should not be moving this high this fast. And so, and the psychology behind that is that if this is our high point, our price is right here at, say, like 70, 75, and if our stochastic, which is a measure of trend, sets its high point down here at a lower point than it did when price was at 70, 75, and price is now at 71.50, this is, something isn't registering correctly here, something's a little bit off, and we see that take place fairly immediately after this divergence comes in. And again, divergences aren't a predictor of a price move, they're just used as a supporting bias towards your overall pattern, and in this case, my overall pattern was this ascending wedge that was playing out right here. And so once you have a pattern, you want to start looking for divergences, Fibonacci levels, resistance and support levels, and just the price action itself. And once we broke down to this point right here, I was a little bit wary because we broke below this support line, and then we come up, we make a lower high, which is a second indication. I'd look at the divergences, I'd see there is one, and then I see that we break below this a second time, and we try and we touch this support line, and we get rejected, and we waterfall all the way down. And that's just the psychology of how I would view this price action today. So I'm bearish biotech for the short-term future. Potential support levels in the near term are it looks like the 78.6, we already fell through that, so I'm not going to give that too much hope right here. However, we do have the support line, this lower support line right here, and it might bounce off this price here at 70.40, or what I believe might be a more likely scenario is that we fall down at least to the 61.8 level, which is our previous, consolidation zone, if you want to even call it that. Price moved sideways for about 5 minutes. I believe that we might fall more realistically down to this 38.2 level, which I've marked in green as a potential decent entry point. This is at 68.6, and another good entry point would be here at the 23.6 level. All right, so that's my analysis on XBI. Let's move on to volatility in the market today. Let's go to the 1 hour chart right off the bat. We see a very similar pattern taking place right here. We have a rounded top 4 times. We have 1, 2, 3, 4 of them. And this is what I mean by once you have a strange pattern, or price is getting tight or squeezed and you're confused, you're hitting resistance levels. In this case, this red line is our 127.2 Fibonacci level. So this is a resistance level. We look for a divergence here. And what do you know? We do have a divergence. Our stochastic is making lower highs and price is making significantly higher highs. And we did see a fall way back down to the bottom of this channel. We hit the top of this channel as well as this Fibonacci resistance zone, and we were supported by the channel. Then we come up here and we make an identical pattern in my eyes. I'm a big fan of looking at reciprocals in the market, and like I said, my favorite quote is the market never repeats itself, it rhymes. And I see it rhyming here again. We have another divergence that's moving downwards. Before this dumped over here, we see a higher high set by this, and then we fell down. Over here, we have a higher high, and today, volatility, we were actually down. So I got my thesis correct yesterday that, something was wrong. It was a very small move down, but small moves can snowball very quickly. All right, so on our 30-minute chart, it looks like we've got some resistance right here, marked by 3 lows, 1, 2, 3, which is probably why price stalled out right here. If we break down below this level, I see our Fibonacci zones. This would be the next consolidation zone right here, marked by 1, 2, 3, 4. So this might, price might move down here to 77.50 in the near-term future and then bounce up higher, or we could just fall down to the 78 or 61.8. So we come up here and set a double top. I marked this in a bright red bolded line. It looks like price was rejected off this level, which was our previous high at this point, and we fell lower and we were supported by this support line that I drew right here, as well as the consolidation previous lows from the last sessions. And just out of curiosity here, looking at the price, I'm interested. I just want to draw it and clone this price move right here. So we've got a high, come down, another high, and then we kind of make and it kind of looks like that. Let's clone that and drag it over to the current situation. And that looks pretty dang similar to me. We did not make much of a higher high, which is the only difference that I'm seeing here, but this previous pattern seems to fit extremely closely. So that's something that's interesting, I guess. Let's go to the 15-minute chart. On the 15-minute chart here, let's get rid of this clone. I just did that for fun, I guess. We have a divergence right here, high price and a higher price, and stochastic makes a high and then a lower high. We see our volume trend is trending downwards right there. You see it's trending downwards, which psychology means that there are fewer and fewer buyers stepping in, and we see at the end of the market that we had large bear volume, and that means that buyers are no longer supporting the price up and bears are starting to turn the tides. We can see this playing out with our CCI starting to break below 100 and move downwards. Let's go to the 5-minute. In the 5-minute, I've got several divergences. This one is actually a bullish divergence, low and then a lower low, and price makes a low and then a higher low, and price makes a low and a lower low. And we see this take place immediately as we blast off. However, I start to see some divergences here where we move lower, we make a high and then a lower high, and price makes a high and a higher high. And then lastly, I have one little one right here at the peak where the stochastic makes a high and a lower high, while price makes a high and then a higher high. So we see that immediately come into play as price dumps. And again, we can just see our bear volume take root right here. Let's move to the 1-minute, and that is not a pretty 1-minute picture. All right, so that's my thesis on volatility in the very near term. I guess on the hour chart, just by these blue arrows, we can see the same kind of volume, low volume marked by a rise in bearish price action. And right here, we are getting down to very low volume areas again, and the bulls have just started to make higher volume surges than the bulls are. So short-term thesis, I think we're going to go lower. I think we're going to go below $76. Medium-term thesis and long-term thesis are the same. I think that volatility is going to continue to move up in the long term. I'm just looking for a good entry on XIV. I actually bought some VXX today, and it started paying off quite nicely towards the last minutes of the day. We can see just this enormous surge in bullish volume come into the price. I bought it down here at $13.01, I believe, and I was trying to get $13. I had 3 limit orders set. I had $13.02, $13.01, and $13. My $13 didn't get filled, but my $13.02 or $13.01 did. And the rationale for this is we are at 2-decade-long lows for the VIX. Now, I almost never play the VIX just because it's programmed to constantly move down. However, if you catch it at the right time, you can make a nice gain. You see here we're at about $13.50, and we move up to $16. That would be a nice little 15-20% scalp right there. And yeah, so I'm actually in the VIX right now as opposed to XIV. The amount of time spent in each comparatively is about 95% to 5%, so that just kind of goes to show my sentiment towards volatility in the near-term future. Let's move on to the market, Spxl, and see what happened today. We can see that this is the pattern that we were tracking for several months. We have an ascending triangle. We set an A, B, C, D, E. We break out, we retest, and then we run higher. The exact scenario played out exactly how we wanted it to. We make an A, B, C, D, E. We break out, we flagged and retouched this previous resistance line and shot up higher. However, we had a down day today, and let's look at why. For about a week, I was looking for this retest of this previous trend line. We didn't get it. We were about 10 cents away from it. However, this came true, and we did run higher. But a secondary supporter here of this being a breakout, a true breakout, is when ascending triangle specifically breaks out, I expect the RSI to come up to overbought regions because we already ran up, from down here all the way up here. It should be overbought. And the psychology right here is that we just want to cool off our indicators, let the technicals kind of settle down a little bit. And an indication of this is our relative strength index. And we can see that play out really nicely here in Spxl. We basically just take, 2 or 3 or 4 days. And I was saying the entire time that if we can touch 50 and hold it, the first time that it starts to turn upwards would be a good entry point. And the exact scenario plays out here in the 30-minute is we just let technicals kind of cool off. And we see that we hold this 50 level very nicely throughout that. And then we move higher. And the first indication of us breaking above 50 is basically a run up from 33.50 to 34.70, which, is pretty good. And from this, I took the move, from Fibonacci, which here's our 0, here's our new 100% ceiling, and I just wanted to look for the resistance zone as price makes its way upwards, and it looks like we're getting stopped out here perfectly at the 141.40 continuation Fibonacci level. And it kind of looks like the exact same scenario is playing out over here in today's price action as it did last week from this kind of measured move consolidation zone. And this is usually pretty good because price should consolidate on its way up. Otherwise, we start getting into things like wedges and whatnot. And I've looked at the technicals, I've looked for divergences and everything, and in all honesty, I cannot really find any for the life of me. The market seems strong. I mean, for the next 2 or 3 days, we might move solid sideways, we might drop, a little bit, but I don't think that any reversal is clearly outlined in the price action or technicals right now. So on the 15-minute, I kind of drew what I saw happening. I drew the price action here that I see. I see an impulse wave here. We do a 1, 2, 3, 4, 5. This is the end of our Elliott wave, and therefore should be our ultimate destination. This is coupled with the fact that we have a ascending wedge right here. We see that price makes this very strong support line all the way up, and we run up too fast, and we set in this high point, and we cannot run up as fast again when we set up a lower high point, which leads to a lower degree support zone than our resistance zone, which is literally the definition of a ascending wedge. And we can see that price, it gets squeezed up here, it gets too tight for it, and we break down. What have I always said? I said that once we think that we have a pattern in place, we want to look for divergences. First thing that would have tipped me off is we're at the end of our fifth Elliott wave. Therefore, we should be taking profits. Second thing that would have tipped me off is the pattern, the ascending wedge. Third thing that I would have looked at is the Fibonacci level, which was at 141.2. And last but not least, I want to look for that divergence that I see. And I actually spotted one. We've got a hidden divergence right here. We've got a equal low on much higher prices. So the stochastic comes all the way down here. Then we hold it for a long period of time. You wouldn't have seen this all the way until we make this new low right about here, right when we break out of this ascending wedge. And this is a divergence because price moves significantly higher while our stochastic makes an equal low. And we can see this kind of play out right here. And price has been moving sideways ever since. So like I said, since this is a wedge, I'm going to be looking to buy some Spxl if it drops. However, I'm out of this ETF right now. I don't want to buy highs, I want to buy lows. So a couple things that I could see playing out in the near-term future is I could see us doing exactly what we did last week and just moving sideways, letting our technicals cool off and waiting for the RSI to hit 50 before we start looking at a position. And if that's the case, I can see us moving down to the 78.6 level, which is not much of a move down. However, if we are not exactly the same as last week, I could see us moving down. Next support level would be 61.8, and beyond that, 50 is not significant at all because it doesn't have any consolidation right here. So if we break below 61.8, we'd be going to 38.2, in which case this was our previous high, our previous resistance zone. And if we break through resistance, resistance becomes support. And I would be looking to enter a position here if we do end up falling down to about $34. So that's my analysis for the overall market. Spxl, bull 3x shares. Short term, I guess I'm neutral. I don't know whether price is just going to cool off the technical indicators or if it's going to be slightly more bearish and move down to $34, in which case I'm going to be interested in taking a position. But in the medium term, I think that we have a clear indication of a breakout of the larger pattern going on, and in the long-term time frame, it's very hard to build a case for the bearish situation right now. So short-term neutral, medium-term neutral to bullish, and long-term bullish. All right, let's look at natural gas. So natural gas drops yet again. I don't know, what is this, like the 10th day in a row that we've fallen lower. I still have a position in UGAS. I averaged down fairly nicely today. When I say nicely, I mean I bought it about 1370 and averaged down. As far as the chart goes, I was expecting this to be a hard support zone. Way back before we broke down, I saw a different version of this descending triangle. I have since changed my ABCDE, but it was a bearish descending triangle, and this should have been obvious to me given that price had moved downwards into the trend. It should continue on downwards, but we have our A, B, C, D, E, and then we break down lower. And right now, the pattern that I can identify is a falling wedge, and falling wedges are sometimes pretty vicious. As you can see, we've dropped about 25% in the last week or two, which is pretty devastating to some individuals. I guess I'm sitting okay, but that's besides the point. This green line right here marks our bottom from this time exactly last year. As far as the RSI levels go, we are very oversold, and we have remained oversold for a number of days now. When was the last time we were oversold? It was right down here when we were at our lows of last year again. So this is the first time we are oversold, and I still believe that there is a large profit to be made for those that stick around and hold into the trade, although I don't want to recommend that until we get a more clear price reversal, because right now it just looks like it would be catching a knife. We do see our stochastic moving up fairly nicely. It's consolidating in this zone. Our RSI is beginning to try and break out of this 30 range. It's having trouble. Breaking out of this 30 range would signal us to have a dead cat bounce, and we would probably go to this 50 RSI level and then probably get rejected, come back down, set in our ultimate low, and then move on higher. So that's kind of my price for the short term. These measured moves right here, this is the high of the original descending triangle, and if you count this as just a continuation of a descending triangle bearish version, this would be the scenario that plays out, and it actually fits fairly well in that this is the swing high, and we move this down to the swing low. We come over here and clone this and bring this to the apex point, and we see that our apex point falls right here at 1350, 1360 range, and the second measured move that we do is our breakout point to our new support zone. We were only supported for about a day, but I drew it nevertheless, and it comes down to this exact same level as the larger apex pole that we drew before, call it pole number 1. So this pole to the support, we clone it, we bring it to the next breakdown range, and we see that it runs all the way down here to about the 1350, 1360 range again. So this would be the complete measured move in my opinion, and I have this outlined by this rectangle right here. Let's move on to the 15. A couple of divergences taking place and gap fills to fill, I guess. Let's show these gap fills here on the candlestick chart. They are fairly large, and usually gaps get filled at one point or another. For example, we can see that we broke down here, and this gap was filled eventually. We came all the way back up, we filled it, and then we got rejected. But the point is that we filled this gap, and we have two gaps over here. One, it looks like from 1695 to 1685, people woke up and they were down $2. The next one comes right here from 1695 to 1685. So we will be looking to fill those in the hopefully short to near term future. This divergence that I've got right here is marked by this stochastic making a high, a higher high, and a even higher high right here, and this is a low and a lower low. So this is a large divergence in my opinion. It is a multi-day divergence, and second divergence that I see comes from this right here making a high, higher high, higher high, same scenario, and over here we kind of have price coming towards this exact same level, even though our stochastic has been moving up steadily. So that would be something of interest to watch for the coming days. On the 5-minute chart, here's like the definition of why divergences how they should be treated. So divergences occur when a technical indicator moves in the opposite direction of the price of its underlying asset. Under the right circumstances, a divergence can be an early sign of a major price reversal, allowing traders to anticipate and take advantage of a change in trends. And that's all we can do as traders really, is to put the probability of a predicted price move in our favor. It's kind of like poker, but not at all at the same time. It's like poker in the sense that if you have the statistical probability, oftentimes it's worth a shot at that hand. And that's basically what divergences give you, is just an added, probability on your side that something might take place. So here on the 5-minute, let's go back to our Fibonacci. I think it's easier to see. We can kind of see a descending triangle take place. This black line right here is pretty firm resistance right now. We bounced off of it several times, when in comparison we've only bounced off these for shorter time frames, for shorter timelines, and fewer times. Here we bounced off once, twice, 3 times, 4 times. Resistance, broke out, and fell back below it. So there's a lot more happening at these levels, which would give further weight to the power of these measured moves, because this measured move is fairly accurate in predicting the bottom, if this is the bottom. This green line, once again, is the lowest price from last year at this exact same time. This extremely high CCI right here shows that sellers are starting to exit the markets, or starting to exit this ETF. Let's go to the 1-minute. So the only divergence that I could see here in the 1-minute really is when this trough happened down here. We have a bull buy setup where price makes a high, or stochastic makes a high all the way into this, and then price makes this, it doesn't respond. We see I have the degrees here. We have a 6-degree move upwards, and this is a 50-degree move upwards. So price and stochastic are not correlating as well as they should be. At the end of the day, we see a lot of bulls coming in and buying at these prices, which gives me some confidence that tomorrow we might see our first green day, which I'm sure that a lot of people would be happy to hear. This blue line marks the apex of this descending triangle right here. And I think it's interesting to note that the low of the day was exactly at basically this apex area right here. So this is just kind of an interesting thing to look at when you're charting, is if you draw a pattern, always look at the ultimate ending of that pattern. And in this case, we can see that it's fairly significant. We can see this was my original pattern, which I had drawn. I thought that this was a false breakout. And the apex of this was actually still fairly significant because we gapped up the next day. However, we were rejected off of what I concluded to be the new and legitimate descending triangle resistance line. And over here, we can kind of see the exact same thing happen. This is the lowest low of the day, and I'm interested to see what will happen tomorrow for natural gas. Let's move on to U.S. oil. So for U.S. oil, some interesting things happened today. I had a great day. I've been in DWT since the high up here. It was just kind of a signaled buy based off of my channel trend lines. It was probably my best trade as of late, but I ended up exiting all of my DWT today for a couple of reasons, and I'll get to those throughout the video. I might be wrong, and it might run down further. It still could drop another $1, but I was happy with the 15% gain I already had, and I don't want it to gap up the next day, and basically I got weak hands and sold. But we will have to see what the coming days have for the price action as to whether that was a good idea or not. Let's go back and check out what that divergence was. So here on the hourly time frame, I see that our stochastic is no longer making lower lows, and we made basically a higher low right here while price is making a significantly lower move, and this is kind of a first tip-off point that I had when looking at the price today. Second thing that set me off is if you look at my timelines here, these are all equal timelines, and I think they do a good job at marking certain points in a trend. For example, we have a low, halfway move, high, halfway move, almost a low, and this is the high, this is the halfway move. Anyways, you kind of get it. They don't always line up, but they are just kind of an indication of potential large moves to come. And what I noticed is that the middle of these ranges are also somewhat significant to a degree. For example, if you look at this where I said it was almost low, the low actually came in the middle here. And over here, you can make the argument that this was the middle, and we see a large sell-off right here. And we are coming into the middle of this timeline and this timeline. And so I think that a big move upwards or downwards is about to play out. So in my last video, I said that the market never repeats itself, it rhymes. And I thought I saw a similar pattern right here on our ultimate destination down. And I thought I saw the same thing occurring right now, even though looking at it a lot longer, I noticed that it is quite different in several significant ways, I guess. First way that it's different is that it stays up here and hugs this resistance line a lot longer. Right here, we basically just bounce off of it and go down. This might signal, increased weakness, but that in and of itself kind of invalidates my theory that it was a similar pattern. Second thing that is different to me in my eyes is the stochastic. Over here on the left side makes this long rolling bottom down, and we move up, but it's not like a flat top like this, which is bullish. It's just a spike top, and we move down. And we kind of have the same thing over here, except for we don't have that rolling bottom that I like to see, which just kind of shows a lot of weakness, I guess. Instead, we're getting pinged back and forth over here a lot more than I'd like, and we're starting to move back up again. And lastly, on my indicators, I guess the RSI, sort of like the stochastic, makes this nice long rolling bottom, and that shows a lot of weakness in it, and we fail to break above the 50 right here, and we come back down and make a another oversold RSI level twice. However, if you look over here, this rolling bottom is not exactly the exact same thing as this bottom right here, and so basically what this is telling me is that there's not as much bearish sentiment over here as there was previously in this downward trend, even though it's a similar pattern. So being on the bear side, it doesn't make sense to hold on to our theory and stay bearish just because price is moving downwards. And actually, this descending wedge is considered a bullish pattern. However, it's also considered, a bearish continuation pattern unless it's at ultimate lows, and we're not at ultimate lows right now. So if you are still in DWT or thinking about getting into UWT, I would hold off for the next few days to wait for the big move that I'm expecting to come. Another divergence that kind of set me off right here is this bullish divergence. We have our stochastic slowly moving up, making lower lows. You can really see that play out right here on this last one where it didn't even get below oversold levels. You can see over here again that each time it comes down and it makes, lower lows, but over here it doesn't, which is somewhat significant in my opinion. So we're making higher highs right here in our stochastic while our price moves significantly downwards. My prediction yesterday was that we were going to come up and hit our E and then fall downwards much stronger than we did today. And instead we got this, we did get a drop, and I ended up exiting a lot of shares right here when I noticed that the stochastic didn't make it below this level here on the 15-minute time frame. So right now we're kind of hitting some support right here, and we saw that and we bounced up and we came into what sort of looks like this flag pattern to me. However, it's at the very bottom of a trend and it's hard to identify. However, RSI has been moving up fairly nicely. You can see our RSI making higher highs, which would go along with our thesis that this is a divergence right here in price. And going on to the 5-minute time frame. Last but not least, we are kind of coming into some consolidation zone right down here where price made its bottom previously, and so we might see more chop than usual down here. You can make the same argument for over here, except for our first A right here down to B kind of took out all of that consolidation that we had right here, and our A to B move right here didn't even reach this low down here, so we didn't take out any consolidation here. C to D, we just touched the top of it. We never set our E wave, and we have yet to come into this consolidation resistance zone, and we're starting to get a bit exhausted in prices. So all of that taken into account, short term, I'm neutral. I don't know whether my analysis yesterday will come true. Technical analysis is a constantly evolving animal. You got to play with it day by day, and constantly stay skeptical of yourself and your own analysis, and that's what I did today, and I took profits. And medium term, so short term neutral, medium term bearish, long term I guess I haven't looked at the long term chart. So that's my analysis for the oil 3 times ETF, UWT, and DWT. And I wish you guys best of luck in trading tomorrow. That's all I've got today. All right, bye-bye.